All right, guys, I'm not going to waste any time today. This is your watch list for next week. If you want to bank, you need to watch this video all the way through because I'm giving you the exact setups I'm eyeing. Get this video to 100 likes and comment, "Let's get rich," if you watch the full video. Let's jump straight into it. First on the list is Indonesia Energy, ticker symbol INDO. This month of August, we already know oil names love to run around this time of the year. It's been happening for years, and yet most traders still miss it. On top of that, the last week we had a major geopolitical headline, Trump's threatening Russia. Now, no one wants war, but let's be real. In times of tension, oil almost always get a bid. If you've been trading for a while, you know markets move in cycles. We call this sector rotation. Different sectors get their moment to shine at different times, and historically, energy stocks, especially small cap oil names like INDO, get hot in late summer, right into hurricane season and ahead of Q4 demand spikes. That's why in the Discord, we had oil names on our watch list for a while, because when a sector is due for a rotation, you do not want to be late. You want to be in before the rest of the market piles in. Now let me go further into the geopolitical event that happened. Last week, Trump made some serious comments towards Russia. No matter where you stand politically, the market reacts to uncertainty in the world of commodities. Oil is the go-to safe haven. Anytime there's talk of geopolitical tension involving major oil producing nations, crude prices tend to spike. That trickles down into low flow oil plays like INDO, which can move insanely fast because of their small supply shares. So we had seasonal sector rotation into oil, the geopolitical headline fueling demand for energy, a bullish chart set up ready to pop. That's why I say trading isn't about guessing, it's about stacking probabilities in your favor. Now let's go to the chart, because this thing was telegraphing the move before it happened. If you look at the monthly candles, INDO has been in a long downtrend since its massive spike in early 2022 when it hit nearly $50. But over the past year, something started forming, which is that falling wedge pattern. Now falling wedge patterns are bullish reversal patterns. They show price getting squeezed tighter and tighter until the pressure releases. On INDO, we saw that squeeze tightening right between $2.20 and $2.80. Here are the key levels we played off. 220 support zone, that's the absolute floor from which buyers kept stepping in. 250 is your demand zone. Multiple monthly rejections have flipped into support. And then you have 280, which is the breakout trigger. This was the line in the sand. Once we closed above this on volume, it was game on. From our 280 entry, price ripped to the mid threes and we locked in a quick 15% gain in the Discord. Now here's the next levels I'm going to give you guys. First resistance is 350. Expect some selling here, but if we break it, it opens up much more upside. You then have your second resistance, the $4.25. This is the big psychological level where I expect heavy volume. Your major target is $6. This is the top of the wedge and a huge round number that can attract momentum traders. Next on the list you guys have seen before, and that's ticker symbol ABP. The first time ABP made its move, we were already watching it. Price had been consolidating for weeks inside that tight blue rectangle, a textbook accumulation phase. The volume was drying up, the chart was tightening, and we knew once the breakout came, it would be violent. We took advantage of that move early. When price broke above that 23-cent level with volume, it ripped all the way up to almost 40 cents. That's the kind of move most traders only see after it's too late. Now fast forward to today. After that first spike, ABP pulled back, nothing unusual. In fact, pullbacks are healthy because they reset the chart and shake out weak hands. Instead of completely collapsing, price formed a higher low and started building a new wedge pattern. That tells me buyers are stepping in earlier than before, which is a bullish sign. This is exactly why it stayed on my watch list, because once a stock proves it can run once, it often has a second or even third push left in it. And right now, ABP is tightening up again, getting ready to make its next decision. Key levels to watch, you have the support zone, which is around this 20-cent range. This is your absolute floor. As long as we stay above this, the structure is intact. Then you have your next support, 23 cents. This has been holding well as a near-term base and is important for maintaining momentum. You then have your breakout trigger, which is this 27-cent level. This This is the line in the sand. If we close above this with strong volume, I expect a test of new highs. Major resistance is 35 cents. This is where the last rally stalled, so expect sellers here. But if we break it, things can move very fast. And here's the key, I'm not just looking at the chart in isolation, I'm paying attention to volume. Without volume, breakouts fail. But when you pair the right level with a surge in buying, that's when you get those explosive moves. I can't stress this enough. Patience is the most underrated skill in trading. A lot of people would see this consolidation and think it's boring, but that's exactly when the best setups form. Every day it stays in this wedge, it's building energy, and when that energy is released, the move can happen in 1 or 2 days. We've already seen ABP run once. I'm not interested in chasing it when it's already mid-spike. I want to be in before the crowd, just like last time. Next on the list is SoundHound AI, ticker symbol SOUN. Let's rewind a bit. Back when SOUN was consolidating around that $4 to $4.50 range, most people weren't even looking at it. History always repeats itself. We had a massive run from $3 to $10, then a big consolidation. We broke out of that consolidation and ripped straight to 14 plus in just weeks. So when we saw that exact triangle consolidation pattern forming again, but this time with higher lows and building volume, we knew it was just a matter of time before the breakout hit. That's why we loaded positions early. By the time most people saw that breakout candle on Twitter, we were already sitting on double-digit gains. This is proof for an example. Now let's talk levels, because this is where the game plan gets serious. You have your immediate support, which is 12 to 12.50. As long as SOUN holds above this zone, momentum stays intact. You then have your breakout confirmation, 15 to 15.50. We're already there right now, but I want to see a strong close above this area to confirm continuation. Next major target is $20. This is a psychological and a technical resistance. Expect heavy volume here. Then your big target is 25 plus. If we get above 20 with strong momentum, 25 is not only possible, it's probable based on the last measured move. Now, a lot of you guys might ask, well, you guys are up 100% in the Discord, so is it too late? Not necessarily. The reality is big momentum stocks can run much longer than people expect. Look at what happened the last time we broke out a consolidation. We went from $4 to $14 in weeks. This time we've broken out from a much higher base, which means the targets above us are even bigger. The chart is showing higher lows, a clean breakout from the downtrend, and we have volume confirmation, the 3 key ingredients for continuation. Plus, AI related names like SOUN are in one of the strongest sectors for momentum trading right now. That's why I'm not just holding my core position. I'm looking for another entry point to scale up for the next push. I'm going to be real with you guys. If you're watching this on YouTube or seeing it on Twitter, you're already late to the first move. In the Discord, we were buying before the breakout when the risk was low and the upside was massive. That's why we're already sitting on 100% profit while most are still deciding if they want to buy in. And it's not just SOUN. We've been stacking these plays back to back. The difference is the Discord sees the setups before the crowd. We're never chasing, we're simply just planning. Next on the list is Alibaba, ticker symbol BABA. This has been in a brutal downtrend for years. Every bounce has been sold into, and the stock has been crushed from over $250 down to the $60 to $70 range. But look at this. That downtrend has finally been broken. Not only did we get a breakout, but price ripped straight into a major demand zone between this 115 and 125 range, a zone we've been watching for months. The demand zone is crucial here because historically, when BABA gets above this range, it tends to trend much higher before finding resistance again. And right now it's holding above it. I want you to notice something. We didn't chase the breakout candle. We positioned ourselves before it happened. So now we can watch this play out with no stress. In the Discord, we spotted the falling wedge forming right around that 95 to 100 range. This is always a bullish reversal pattern. And we knew that if it broke to the upside, it could rip harder into the demand zone. And now we're already up 20% profit and counting. So here's my exact plan moving forward for you guys. If BABA dips back to 118 to 120 and holds, I would add more. This keeps my average cost low while positioning for the breakout. If we break 130 with strong volume, I'll add another position targeting 150 to 155. I'm also looking at long-term contracts 3 to 6 months out around the one $20 strike, slightly in the money. This way, I'm not rushed by short expiration dates, and I can ride the bigger momentum. The important part is patience. Most traders blow up because they chase every green candle and then they're shocked why their portfolio keeps going down to zero. There's another layer to this play as well. You have the macro catalyst. Chinese stocks has been beaten down for years, but we're starting to see government support, policy shifts that could bring foreign investors back in. On top of that, Alibaba is in a sector of e-commerce and cloud. That's not going anywhere. If sentiment turns bullish here, these moves can accelerate fast. And because the stock has been down for so long, the upside percentage gains can be massive compared to something that's already near all-time highs like Palantir. Next stock on the watch list is ticker symbol QUBT. Let's rewind and understand where QUBT came from. For years, this stock was dead money, trading down from triple-digit prices all the way into penny stock territory. Most people forgot it existed, to be honest. But here's the thing, every time it touched this $7 to $10 demand zone, buyers tended to step in. If you look at the chart in 2018, we ripped from this zone to over $40. In 2021, the same thing, same zone. We ran into the 20 plus range, and now we're here again, pressing right against this demand zone with massive volume behind us. So here's how I'm breaking it down. Mid-range resistance is this $18 to $20 range. This is where sellers have stepped in short term, but if we break this with volume, things can change pretty fast. You then have your major breakout level, which is $25. This is the line in the sand. Break above this and the next stop could be 30 plus. You guys should notice something by now. Every push from this zone in the past hasn't been small. It's been going parabolic. We spotted this in the Discord back into the $15 demand zone. Now we're already seeing a push into mid 16s. And here's what we're doing. I'm holding my core position from the low entries. I'm looking for dips towards 15 to 16 to add more before the next breakout attempt. If we smash through $20 with strong volume, I'll be adding heavy for the run to 25 plus. This is the power of catching these setups early. You're playing with house money while the rest of the market is just noticing the ticker. And something most people don't talk about, you can trade these type of stocks in many different ways. Shares, this is best if you want to hold through potential volatility without worrying about time decay. You then have options. This is what I'm doing. If you're looking for leverage, you can take calls out at least 3 to 6 months, ideally at strikes near current price or slightly in the money. Then you have your scaling strategy. Please do not go all in at once. Scale in at a demand zone, then add at breakout confirmation. And remember, just because it's in a hot sector like quantum computing doesn't mean you chase green candles. The money is made in positioning early like we always do. So for the full game plan, if we hold above $15, I am bullish for a retest of 20. Break $20 with strong volume. My eyes go straight to 25, then 30 plus. Any dip back towards $10 is an opportunity in my eyes as long as the demand zone holds. This is the kind of setup that doesn't come around often. It's backed by history, volume, and sector momentum. If you're watching this right now, remember the best trades aren't about luck. They're about preparation, and we've been preparing for this move for a couple weeks now. Now, last on the list is Tesla, ticker symbol TSLA. Tesla traded sideways for nearly 2 years between roughly $20 to $40. This is what we call an accumulation phase. Institutions quietly loading up, retail traders bored and moving on. Then came the breakout. Price surged from $40 to nearly $200 in less than a year. Your second consolidation was 2016 to 2019. Again, years of sideways movement, this time between $35 and $75. But what happened next? Another massive breakout in 2020, running to over $400 post-split. Tesla is doing the exact same thing right now. We've been consolidating for years, and we're forming a tightening pattern. Every time this has happened in the past, the breakout has been explosive. So what levels am I watching right now? You have your support zone, which is this 250 to 270. Every dip into this range over the last year has been bought up. Your breakout zone is 350 to 360. This is the ceiling Tesla has been struggling with. Once we break this level with strong volume, it's pretty much game on. And lastly, you have your second target, which is 450. This aligns with measure move projections from past breakouts. The most important thing to understand here is that Tesla doesn't just inch up after breaking out, it explodes very fast. Look back at both past breakouts, huge spikes in monthly volume before they run. If you're trying to play options, you have to pick contracts that are at least 1 to 2 years out. But if you want to take advantage of the short-term upside here, my game plan is this. I personally would focus on deep in the money or slightly in the money calls. Example, if Tesla's at 320, I might look at the $250 or $300 strike expiring January 26. These have higher delta, meaning they move more like the stock itself. Tesla has done this twice before in the last decade, and both times the move was life-changing for people who position early. Whether you're in shares, contracts, or just watching from the sidelines, this is one of those setups you need to keep on your radar. Now listen, I do this every single week, and that is a special promo for the Discord. I'm only accepting 50 people this week, and once those spots are gone, that's pretty much it. If you've been watching from the sidelines, now's your chance to get in before the plays hit YouTube or Twitter. The link is in the description. Get this video to 100 likes, and I'll see you guys in the next video.